Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about UBTECH Robotics Corp Limited annual report. UBTECH Robotics Corp Limited offers a wide range of robotic products and services across various industries. The company's product lineup includes automated vehicles, humanoid robots, full-stack automated logistics solutions, and commercial service robot solutions. In the healthcare sector, UBTECH provides solutions for operation and management, safety assurance, life care, health management, and home medical assistance. In addition to its core robotic products, UBTECH offers a variety of ancillary services and solutions, including training programs and AI education platforms. The company's product portfolio also includes smart home devices, information management platforms, and wellness service management robots. Furthermore, UBTECH provides delivery, cleaning, and smart service robots for commercial use. Some notable examples of the company's products include the Alpha Mini portable intelligent humanoid robot, the Panda robot, a humanoid service robot, and the UBTECH robotic kit, which is designed to teach children about artificial intelligence. The company also offers healthcare cloud platforms, such as PATHFYNDER, a chair for seniors, and WASSI, a trainer for seniors. Overall, UBTECH Robotics Corp Ltd's diverse product lineup and services cater to various industries, including healthcare, education, and commercial sectors, making it a leading player in the robotics industry. UBTECH Robotics Corp Limited maintains a market capitalization of $51 billion, broadly in line with the industry peer group. UBTECH Robotics Corp Limited trades at a higher price-to-book ratio of 5.86 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation, signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 56% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The net income of the company underwent a significant fluctuation in the given period. Initially, it decreased by RMB 370.1 million, indicating a decline in profitability. However, this trend was reversed as the net income increased by 33% later on. This change suggests that the company's financial performance improved over time. The profit margin of the company also experienced a notable increase. It rose by 9 percentage points, from 28.7% to 37.7%. This significant improvement in profit margins indicates that the company was able to maintain its pricing power and control costs effectively, leading to higher profitability. The reasons behind this change are not explicitly stated, but it can be inferred that the company's operational efficiency and cost management played a crucial role in achieving these improved results. The company's financial performance is a testament to its ability to generate positive operating cash flow. As evident from the data provided on page 39, the operating cash flow for the year 2025 was $1,841,662, indicating a significant increase from the previous year's figure of $1,311,563. This substantial growth in operating cash flow is a clear indication that the company is efficiently managing its resources and generating sufficient revenue to cover its expenses. Furthermore, the utilization of net proceeds on page 51 highlights the company's prudent financial management, with only a small amount remaining unutilized from the total HK3000 $155.71 million. The positive operating cash flow is a crucial indicator of a company's financial health, as it demonstrates its ability to generate sufficient funds to meet its obligations and invest in growth opportunities. In this case, the company's performance suggests that it is well-positioned for future success, with a strong foundation for continued growth and profitability. The company's debt level and interest expenses have undergone significant changes in the past year. In terms of debt level, there has been a notable decrease from RM 537.6 million as of December 31, 2024 to RM 123 million as of December 31, 2025. This reduction is also reflected in the company's right-of-use assets and lease liabilities, which have decreased by RM 16.9 million and RM 22.5 million respectively. The interest expenses have also seen a substantial decrease from RM 26,976 to RM 2614. Furthermore, the interest expenses on lease liabilities have dropped significantly from an unknown amount in the previous year to RM 0.6 million. These changes indicate that the company has made efforts to manage its debt and reduce its financial obligations. Management is emphasizing the strategic importance of research and development in embodied intelligence technology. The company aims to commercialize this technology through various initiatives, including promoting platformization of common technologies and enhancing robot capabilities such as lightweight design and swarm coordination. Key priorities for management include business growth, working capital, and employee compensation. To achieve these goals, the company plans to invest net proceeds from a recent funding round in potential targets by 2027. Additionally, management has entered into a partnership agreement with Liuzhou Industrial Holding Fund and Liuzhou Industrial Guidance Fund to drive investment in the intelligent robot industry chain. This strategic focus on embodied intelligence technology and partnerships is expected to create new opportunities for business growth and development. By investing in research and development, building an open ecosystem platform, and collecting industry-scarce data, management aims to establish a strong foundation for future success. There is no notable activity in terms of acquisitions or divestitures. The company has not made any significant purchases or sales of assets, businesses, or subsidiaries that would impact its overall operations and financials. This lack of activity suggests a stable and focused approach to business management, with the company prioritizing existing initiatives over external expansion or restructuring efforts. The company's financial strategy has been focused on growth and expansion rather than distributing profits to shareholders. As a result, the company has chosen not to pay dividends to its investors. Additionally, it has also refrained from buying back its own shares, instead opting to reinvest in the business to drive further growth and development. Concerns about inventory buildup or supply chain disruption are evident in the provided summary. On page 24, a significant decrease in revenue for other intelligent robot products and services raises concerns about potential inventory buildup or supply chain issues. Further analysis on pages 26 and 37 reveals more alarming trends. A substantial year-over-year decrease in revenue for sector-tailored smart robot products and services, coupled with a massive increase in revenue for consumer-level robots and other hardware devices, suggests that there may be an overstocking of certain products or components. This could lead to inventory buildup and disrupt the supply chain. The data on page 37 also indicates potential issues, as the number of finished goods has increased by plus 73,269, while scrap inventories have risen by plus 3687. These numbers suggest that there may be a surplus of certain products, which can cause problems in the supply chain. Lastly, on page 40, significant increases in payables for raw materials and accounts payable over 1 year raise concerns about potential cash flow issues and inventory buildup. The 59% increase in payables from RMB 408,405 to RMB 648,212, as well as the substantial rise in accounts payable from RMB 77,160,000 to RMB 173,440,000, indicate that the company may be struggling to manage its finances effectively. Overall, these findings suggest that there are legitimate concerns about inventory buildup or supply chain disruption within the company. That concludes the financial summary for UBTECH Robotics Corp. Limited. Feel free to comment below, and I will be happy to answer them when possible.